Hello everyone, welcome to my YouTube channel. In this particular video, we'll solve one more problem related to incidence of tax. From the following particulars of Mr. X, compute his gross total income for the assessment year 2023-24. Okay, we have to compute his total income in all the three cases. If it is an ordinary resident, not an ordinary resident, or non-resident. So the first transaction is income from business in Chennai, business managed from Sri Lanka. So income from business in Chennai. So there is arising aspect. So the income is arising in India. So when the income is arising in India, it is considered as Indian income. So if it is an Indian income, all the three people will be taxed. So there's a chart I've explained in the part 1 video. If you have not seen the part 1 video, please visit the part 1 video and try to analyze that particular chart. Next, income from house property in Mysuru. So Mysuru is in India. The income is arised in Mysuru. So it is an Indian income where all the three members will be taxed. So 1 lakh rupees, 1 lakh rupees and 1 lakh rupees. Next, income from salary in Japan. So salary, the income arising aspect is outside India. Receiving aspect is also outside India. When both the aspects are outside India, it is considered as foreign income. So this is income, foreign income from other sources. When the foreign income from other sources, only the ordinary resident will be taxed. Only the ordinary resident will be taxed. Next, income from business in Kuwait. Business being controlled from Mumbai, 25% is received in India. Total is, sorry, 25,000 is received in India. Total amount is actually 65,000. So just try to analyze properly. So there is a business in Kuwait and that business is controlled from India. So first thing is that there is a controlled income. And when there is a controlled income, two persons will be taxed. One is ordinary resident, second one is not an ordinary resident. Next, remaining what is the information they have given is some part of the amount you are receiving in India. So again, there is an Indian income also. So there are two kinds of income. One is controlled income, second one is Indian income. So controlled income. So they have told that 25,000 you are receiving in India. Total is 65,000. In that 25,000, if you are receiving in India, remaining 40,000 is a controlled income. And as I told you, the controlled income, two persons will be taxed, ordinary resident and not an ordinary resident. So whatever the 25,000 you have received in India, India that is received ಮಾಡಿರ್ತಕ್ಕಂತಹ 25,000, it is an Indian income. And Indian income, we know that all the three people will be taxed. Income from agriculture in Punjab received in Mumbai. Punjab and Mumbai both are in India, and agricultural income from India, it is completely exempted. Indiadu ಒಂದು agricultural income, it is completely exempted. Next, income from agriculture in Bangladesh remitted to India. As I've told you that the word remitted should be ignored. Remitted ಅನ್ನೋ word ನ ignore ಮಾಡಿ incidence of tax ಅಲ್ಲಿ. Income from agriculture in Bangladesh. So the arising aspect is outside India. The receiving aspect is also outside India. When both the aspects are outside India, it is considered as foreign income and it is a foreign income from other sources. So only the ordinary resident will be taxed. Only the ordinary resident will be taxed. Profit from sale of building in India. So you have sold a building in India. So the income has arisen in India. When the income arising aspect is in India, it is considered as Indian income. So all the three people will be taxed as it is an Indian income. All the three members will be taxed. Next, profit from business in Indonesia. This business is controlled from Delhi. So whatever the business you are having in Indonesia, that particular business you are controlling from Delhi, which is in India. So it is a controlled income. When it is a controlled income, two people will be taxed. One is ordinary resident and the second one is not an ordinary resident because it is a controlled income. Next, income from Indian partnership firm. Very, very important. So whatever the income you have got from Indian partnership firm, it is completely exempted. Remember this point. Hindu undivided family as well as partnership firm. Whatever the income you get, it is completely exempted. So this is completely exempted. Interest on savings bank deposits in State Bank of India. So the income has arisen in India. Receiving aspect is also in India. When both the aspects are in India, it is considered as Indian income. And as it is Indian income, all the three members will be taxed. Next, dividend from foreign company received in England. So both arising aspect is in foreign, receiving aspect is in England. Both are outside India. When both are outside India, we consider it as foreign income and it is a dividend received. So it is a foreign income from other sources. When it is a foreign income from other source, we will tax only one person, that is ordinary resident. We will be taxing only ordinary resident. Next, interest on German development bonds. So the income arising aspect is outside India. One third received in India. So in that one third of the amount you are receiving in India. So the receiving aspect, some part of the receiving aspect is in India. So again, there's a two type of income. One is foreign income and Indian income. Two-third of the amount is foreign income. One third of the amount is Indian income. So that is how I have calculated here. So two-third of the amount is foreign income. So 51,000 into two-third is foreign income. And it is a foreign income from other source. When it is a foreign income from other source, only one person will be taxed, that is ordinary resident. So next, remaining one third part is Indian income. 51,000 into one third is 17,000. So 17,000 is an Indian income. And as it is an Indian income, all the three residential statuses will be taxed. So this is how you need to solve the problem. Next, you have to add all the column. You will get the total income. So for ordinary resident, it is 7,12,000. For not an ordinary resident, it is 4,98,000. For non-resident of India, it is 4,18,000. This is how you need to solve the problem. Hope you have understood how to solve the problem. If you have any doubts, please put your doubts in the comment box so that I'll respond to your doubts as soon as possible. Hope you have understood the video. I'll come back with the next video.